everyone, very good evening. You're watching The Money Show on ET Now. I'm Ubina Kapasi. This is the show where we, of course, help you out with your personal finances. We answer your questions and queries as well. You can connect with us by writing in on The Money Show at etnow.tv. But today we have several topics to discuss. Firstly, of course, the AMFI data. What exactly is AMFI? Well, every month the Association of Mutual Funds essentially tells us about how many, or rather how much has been the investments into various categories of mutual funds, how much have people redeemed, which have been the most popular categories of every month. And this time around, it looks like multi-cap funds have found themselves out of favor. So many outflows witnessed over there, and largely people have moved over to large and mid-cap funds, I suppose on account of the entire SEBI norm that has come in. So we'll be talking about that, and we'll be talking about the massive market rally. Sensex at 40,000, Nifty just approaching 12K. The question, of course, is that while the markets are rallying, is your mutual fund portfolio giving you gains which may be aligned with the overall markets? And if not, what should you do? How should you perform, the outliers or the underperformers? That's what we will be discussing today on the show. And for that, I have with me Mr. Rajesh Cheruvu. He's the CIO of Validas Wealth. Mr. Cheruvu, many thanks for joining us today on ET Now. So, Mr. Cheruvu, before I, go ahead and sort of talk to you about this data that has come in from the mutual fund industry, I just wanted to sort of understand your take on these individual category-wise movements that we are witnessing, where multi-cap funds have, sort of taken it on the chin. Of course, it's largely to do with the entire SEBI regulations. However, do you think that, it's merited that investors are essentially redeeming their multi-cap funds?
September AMFI data is clearly suggests large and multi-cap funds have seen some amount of outflows. So at the same time, we have seen mid and small cap funds have actually some kind of traction. That clearly suggests the most recent guidance of SEBI with respect to inclusion of small caps in multi caps seems to be having some impact clearly.
Okay. All right. Mr. Cheruvu, many people are also looking at large and mid-cap funds. It looks like right now that people are removing it or redeeming their multi-cap funds and going to large and mid-cap funds. What do you think of that bit that's going on?
If you look at the multi-cap funds as a category historically, investors' perception is more like a large and mid-cap kind of positioning it is, and a flexi-cap positioning it. But the regulator want it to be more multi-cap. It needs to have multi-cap, means that it should have more than two cap segments they wanted it to be. So that seems to be having rethink. There seems to be actually causing some amount of rethink in investors' mind to reallocate from multi-cap to large and mid-cap category. That segment also seen some amount of positive traction in recent figures. Apart from mid and small cap, I think large and mid-cap segment has also seen some positive traction. So investors preferring more of large and mid-cap orientation than multi-cap, where you tend to have, whether you like it or not, large, mid and small cap. Investors seems to be not liking that kind of construct.
Certainly, absolutely. That certainly seems to, be the case. But mind you, yes, like, Mr. Cheruvu mentioned, there are outflows even in large cap funds, but there are some inflows coming into mid and small cap funds. I guess, again, people are looking at this market that we are seeing, where there's a nice rally that's coming by. The Sensex is at 40,000, the Nifty at 12, approaching it. So let's talk about that phenomena, Mr. Cheruvu, what we are witnessing in the equity markets. Many a times when people will look at the markets, they'll say, okay, great, markets are up, but what's my portfolio doing? How are my mutual funds doing? Some, of course, may be pleased, but some may not be pleased as well. What would you tell such viewers? I mean, is it that simple, really, that every time the markets go up, your portfolio as well should go up, or you should delve a little more into your portfolio?
Especially if you look at the most recent trends and most recent numbers. Since March, markets bottomed. From then, actually, it's been markets have risen by almost 43%. But if you look at it, most of the large cap funds have been underperforming. Hardly, I think, 5% of the funds are outperforming. Same phenomena you tend to see in multi-cap category. That is, in a shorter term, these kind of aberrations, this kind of divergence in performance is given. So one should not give so much of actually credibility or credence to a shorter term performance, because the short term, many things, many factors could drive. One or two stocks itself could skew overall performance of the portfolio or index for that matter. So that's what seems to be causing this kind of divergence. So that because of the divergence, only hardly 5% of large cap or multi-cap funds might be outperforming the index at this point of time.
Okay. What could perhaps be the reasons why some of the viewers may not have seen their mutual fund portfolio do as well as, the markets? If you could just sort of, perhaps that will give some sort of assurance as well to viewers.
You see, I think hardly 4 stocks in the last 6 months itself, if you take, about 4 stocks have outperformed, given actually contributed more than 55-60% of the index performance. So remaining 46 in Nifty 50 or 96 in NSE 100, which is the large cap index, have actually done okay. They're done, I think, below average. But these 4 stocks have skewed almost 55-60% of the contribution has come in from these 4 stocks itself. So if a particular manager might be having these stocks, but might not be having equal weight to the index or higher than index allocation, those portfolios might tend to underperform. So that is where I think I mentioned earlier, the shorter term performance should not have so much of bearing in investment decisions and fund selection process. And medium to longer term outlook of the fund and the portfolio construct and managers mandate and managers fund selection, stock selection abilities, etc. Those should be, I think, primary factors and primary criterion one should look at it. As long as those factors are not actually not destabilized or not untouched. So I think one could stay put and stay invested in such funds.
Okay, makes sense. And we as well say on the Money Show that, when you have to invest in mutual funds, especially if you have a long-term view, you're saving up for, wealth creation, for retirement, so on and so forth, you really shouldn't have too much of you shouldn't sort of put so much emphasis on the short term. It's very important to do that. However, again, Mr. Cheruvu, sometimes, as we do in stocks, there are sometimes certain assets that simply just do not bounce back. These are not just the underperformers, but just the laggards from where there's really no hope of recovery. So, Mr. Cheruvu, how would you recommend viewers essentially look through their portfolio with that eye to identify which are these investments or these assets in their overall portfolio that simply have no hope of recovering and they might as well liquidate them now?
Absolutely, I think that's true. The way I think one needs to look at it is, what is that managers could bring it to the table? So they do the stock selection, they need to do the right stock selection, and they need to give the right allocation, portfolio allocation to those selected stocks. So if they are not able to consistently, if their selection is faltering or the allocation is faltering, so that would contribute or that would translate into consistent underperformance of portfolios. So one has to look at, while evaluating portfolios, is this a consistent phenomena? Is it a shorter term or is it a temporary aberration? If a consistently manager is failing to select right securities or consistently fail to give right allocations, then there is a serious challenge. I think then we need to relook at it. As long as selection is good, But allocation time to time, if he's not, he can change it. As long as selection is good, one of them is good. Selection is most important. The selection is most important thing. The stock selection is good, and allocation time to time he can actually recalibrate and he could bring portfolios up to speed. So one has to do a deep dive and understand whether manager could able to stand up to the mandate given to him and do the right stock selection and do the allocation. If that is not happening to the taste of investors, then that is the time investor has to call the day with that particular scheme and move to alternate scheme which is been well managed from these factors.
All right. Okay. Mr. Cheruvu, let's understand. Like I mentioned, the markets have rallied. Equities as an asset class has seen a nice rally. Gold has just about stayed at 50 or 1,000, and we have yields as well, which perhaps will be influenced when the RBI policy is released. So, do you think that when equities do rally like the way they have right now, it's been a continuous 5 to 6 day odd rally. Do you think that such rallies perhaps could be used by investors to maybe trim down some of their equity exposure, especially, and again, like I mentioned, if your goal is long term, then leave it, like you as well mentioned. But let's assume that it's a more shorter term goal, maybe 1 year or 3 year. Do you think that such rallies should be used to trim down how much equities you have and perhaps use it to park it in safer modes or less volatile investments?
Depends upon it depends upon the kind of asset allocation investor has chosen. If asset allocation with the, I think whatever rally we have seen in the last 6 months, the equity allocation is surpassing than what he is supposed to be giving allocation to the equities. Of course, he has to skim certain amount of profits and move to the asset class which has not moved or which by virtue of it, I think, which would have become underallocated. Reallocation needs to be done. Certain amount of rebalancing needs to be done if allocations become over allocations. But only I think the shorter term rally is not sufficient enough to make this kind of thing, make the portfolio reallocation. First and foremost thing, the asset allocation, against the asset allocation he has to see. Second thing is funds performance, funds underperformance, etc. should not be the key parameter or key bearing to make that kind of decision. That is the point I would like to drive. So if a particular fund has not performed for longest period of time, now we have seen at the last 6 months there is a rally, let us use this rally to relocate it. So then where are you moving in? Whether you are moving from equity to equity or from equity to other alternative like gold or fixed income. So that all depends upon the kind of asset allocation, and the manager performance or manager selection is not a primary driver there. This is more of a secondary factor.
Well, there you have it. That's, of course, then the move that's coming in essentially in AMFI. The way we've seen mutual funds essentially as well perform, given all of this momentum that we are witnessing in the equity markets as well. So that's, of course, the view coming in. What do you think that now also, Mr. Cheruvu, is the right time to consider, buying in more into small cap and mid cap funds? Because, in the AMFI data, that's something else that we noticed, that there are some inflows coming in mid and small cap funds. They do tend to be a bit more volatile. But is that something you're advocating to clients?
Mid and small cap, as a fund says, you are absolutely right. September data is suggesting investors are liking towards that. But we think small cap still some time away in terms of recovery, because the economy is going through a structural reform space, and during the structural reforms, small caps take longer while to adjust. So we have seen that phase is started sometime in 2017. Still, it is going on. But whereas mid-cap side, we see, I think there are selective mid-caps and selective mid-cap funds are actually looking quite attractive at this point of time. We are suggesting investors, based on their risk appetite, certain amount of allocation towards mid-caps can be considered. But clearly small caps not at, we are actually suggesting investors to look at it.
Okay, all right. Well, there you have it. That's, of course, the view coming in overall on mutual funds, what your strategy should be amidst this market rally as well. And I know it could be sometimes tempting as well, to keep looking at your portfolio and then be disappointed when your portfolio does not do as well as the equity markets. But, it's important to understand that this is something that's just simply... especially if you're a long-term investor, you need to understand that you must not pay too much attention, especially to short-term moves. Mr. Cheruvu, thank you so much for joining us today. It was really a pleasure having you with us. And answering all the questions and queries received by our viewers as well. Folks, if you'd like to catch this interview, you can watch it on ET Now's YouTube channel. It'll be put up in just moments from now. But with that, we'll wrap it up. Thanks for watching.